Hello and welcome along to the Property Academy podcast by Opus Partners. I'm your host, Steve McKnight.
And I'm Andrew Nicol.
And today on the show, we're talking about Trump's tariffs and how they're going to impact your mortgage. So over the next 15 minutes, we're going to talk about how Trump's tariffs could actually lead to lower interest rates, the arguments for why Trump's tariffs are absolutely terrible for you and your wealth, and also the argument why they might not be so bad. And then also we're going to talk about how I lost over $5,000 over the last 30 days in the market turmoil. But Andrew, I know we're not going to talk too much about whether Trump's tariffs are good or bad, given that that can be controversial.
It's not like us to be controversial. Look, this is a property investment show, so we're going to kind of keep it to property investment. I personally, I think that these tariffs are completely bonkers, but there's going to be a lot of people out there talking about them at the moment, and the main thing that probably our listeners want to know is how is that going to affect us back here at home?
And one of the things that's really important to get across is like, what actually is a tariff? Because I haven't seen that talked about much. And the way I think about it is, let's say you're Fonterra now, Andrew.
Oh, wonderful.
Yeah, you're petting your cows. You love them. You're out there milking their udders.
I was thinking more about my dividends rather than my cows, but go on.
Okay, and you've got a ton of milk powder that you're going to send over to a US importer, right? So somebody's buying it off you, and it might cost $5,000, right? And now with a 10% tariff, that person who's buying that ton of milk powder off you, not only do they have to pay you $5,000, they now have to pay the government $500 as well. So 10% of whatever they are paying you.
So the government's going to collect an extra tax because that person over there has bought it from me over here.
Yeah. And so rather than that ton of milk powder costing the buyer, the importer, $5,000, it's now costing them $5,500. Now, that could do two things. That importer then says, okay, well, if I'm going to sell this milk powder, it's now costing me more, so I'm going to put my prices up on my customers. Or the other thing they might do as well is say, well, Andrew, it's now costing me more, and so I need you to lower your price as well. And so it really impacts both parties negatively, because maybe you have to drop your price, but also even as you're dropping your price, it's costing the importer more. And so US consumers are going to pay more. The person importing is probably going to have a lower profit margin. And I guess what that means for New Zealand exporters like Fonterra is they're potentially going to collect less money because of this. But again, this is a property investment show. We probably don't have too many executives from Fonterra listening in. So what's the impact here at home for property investors?
So in the short term, this is probably actually a good news story because swap rates in the last few days have come plummeting down. And as a result, that'll flow through to our actual fixed interest rates, more so than even the OCR drop this week that we're expecting to have, because we're recording this prior to that OCR review. And the reason that the swap rates have come down is because now the market's expecting, hey, there's probably a little bit of turbulence on the horizon, and so people will move their money into more stable investments like government bonds. And so as a result, there's more money to be lent, right?
Yeah, so basically the way that works is if everybody looks at the S&P 500 or some other measure of shares, they'll probably be like, oh, okay, this is not very good. Ever since those tariffs have been announced, we have seen our share prices just plummet by around 10%-ish over 2 days. And so because of that, shares look very unstable. Let's sell out of shares. Let's move into something that's a bit safer. That might be bonds or term deposits, those kinds of things. If there's more money that's going into lending out, which is effectively what a bond is, people lending money to other people, that means that the interest rates tend to come down because there's more people who want to invest in those sorts of things. And as you said, the 1 year swap rate in New Zealand, it's been pretty stable since the start of the year. You know, we kind of started at 3.57%. Just before Liberation Day, we were sitting at 3.4%, and it was kind of just going sideways. Liberation Day came out. We heard about those tariffs, and the swap rates have fallen by over 0.2%. And so I think that does show like, oh, okay, that's going to make it cheaper for New Zealand banks to borrow money because they borrow a lot of money from overseas. Let's borrow that at a cheaper rate. We can pass that on through to New Zealand borrowers. And so that's kind of counterintuitive because most of the stuff online that I've seen is shares are doing really poorly. I think what a lot of people have missed is, okay, there's some really interesting movement in terms of interest rates.
Yeah, but the challenge is whether or not this has a long-term impact, which is less positive, which is, as Ed was saying before, if I'm now the importer and I put up my prices to my customers, that has an inflationary impact. Now, that will flow through to inflation across the world. And as a result of that, we might start to see interest rates be kept at a higher level rather than reduced.
And just walk us through the logic of how do tariffs lead to inflation? Because I think most people get, well, yeah, okay, if there's a tariff, and with the Fonterra example, that makes goods more expensive for US consumers. But how could Trump's tariffs impact our inflation rate in New Zealand?
So you might be thinking, okay, well, that's only going to affect the Americans, right? But we buy stuff from America. And if the American producers of products are also putting up their prices, or parts of their supply chain are now more expensive, that results in more inflation for us.
Yeah, so let's say, and I don't even know if they make cars in Mexico, but I know they do between the Canadian and US border. But let's just roll with this example. So let's say that US companies can currently make cars really cheaply in Mexico. Over here in New Zealand, we're happily buying them, and we're like, great, lovely cheap cars, even though the cost of everything goes up over time. Well, if those companies then say, well, because of the tariffs, you know how we're going to get around them? We're going to move all of our production into the States. And yes, that's going to be a bit more expensive for us, but it means we can get around the tariff. Well, now we can't buy those cheap cars from Mexico anymore. We've got to buy them from America, and those are more expensive, A, because American labor tends to be more expensive, but also the real estate might be more expensive. But also, if those companies are now protected from US trade barriers, from those tariffs, generally what happens is those companies get a bit flabby. They're not facing the same level of competition, and so they become more poorly run. That tends to increase costs as well because they don't have that same level of competition.
I did actually see on TikTok, so I know you're going to criticize us straight away.
Yeah, the source of all good financial news.
Where one guy was talking about China fighting back against the States with these tariffs and saying, so previously, we would respect your intellectual property laws, right? So rather than rip to a certain extent, rather than rip anything off, we're not going to do that. We're going to produce your iPhones, for example, and that's your product. Now, basically, China have said, we're going to do whatever the hell we want, and we're going to undercut America at every possible way. Do you think that would have...
Well, to be honest, I'm going to have to go fact check that before I give any
I've done that.
comments.
I told you I saw it on TikTok.
We'll come back to it. We'll do another episode on that. But while we're talking about interest rates, the other thing that's quite fascinating is that markets are saying that interest rates could come down faster. So I was looking at the market expectations of the Fed cuts, which is basically America's central bank. And if I took you back 3 months ago, markets were saying, we reckon there's going to be one cut in the Fed's rate throughout this year. Okay. 2 months ago, they said, okay, we're now pricing in 2 cuts this year. A month ago, the Fed, markets were pricing in 3 cuts from the Federal Reserve this year. Now they're pricing in 4 cuts because of these tariffs. And what they're really saying is the US economy could go really, really poorly as consumers cut back, because now when they buy their milk powder or whatever the finished good of that is, milk made from milk powder, it's now more expensive. So consumers cut back. That means the economy does very poorly, given that the American economy is really, really driven by consumers, people buying stuff. And so if they cut back, the economy is going to do quite poorly. If we go into recession, the Federal Reserve is more likely to cut interest rates. And again, remember, over here in New Zealand, our banks borrow a lot of their money from overseas markets. And so therefore, if interest rates fall over there, that could make your mortgage cheaper. And so I guess what's the impact on house prices, given that this is a property investment show? This could have a marginally positive impact on house prices if interest rates do come down slightly faster than expected. I don't want to say Trump's tariffs equal much higher house prices, because I think the future is so uncertain that it would be ridiculous to say that. But overall, for your wealth as a Kiwi, it could really go the other way as well. Even if I look at my KiwiSaver, over the last 30-ish days, my balance has gone from, I started with about 74 grand in there, and I've lost 6,000 $6,500 basically, or $6,400, which is almost 10% of my balance. And even though I've put some money in over the last month,
You're still down.
I'm down roughly about $5,000, right? I mean, the worst thing is, oh no, that's a positive. At least I've got a slight tax refund because of that. That's always nice. About $100. But you know, I personally am down $5,000 over the last. The bulk of that will be over the last couple of days. In fact, when I was preparing for this podcast, I was like, okay, I was at 74. Now I'm down at I think I was down at 70 grand. You know. And now I opened up my KiwiSaver this morning and I'm like, okay, since I checked last night, I've lost an extra $1,400. I mean,
expensive night's sleep.
Well, I actually look at it quite positively. I was in a cab going to Polyfest, which is a big festival in Auckland, and I was sitting there with some friends, and we were all talking about, you know, what shares do we want to buy because it looks like they're all on sale, and it's all looking quite exciting for us, and we're quite into it. But let's get into kind of the upsides and the downsides for New Zealanders. What do you see as the upside from this tariff war?
Well, there might actually be some boost to tourism. So the New Zealand dollar buys 56 US cents at the moment. So the US dollar is really, really strong. So if I'm living in America at the moment and my currency is really, really strong, I can come to New Zealand, I can visit Queenstown, wonderful place to go visit, and it's pretty cheap. It's cheap living here. So you might see a bit more tourism coming into the country.
Yeah, I'm about to go to the States. I've been looking at the dollar being like,
that's going to be a problem for you.
This is going to be a very expensive business trip. Thankfully, it's a business trip.
I was about to say, you'll be happy you're taking the work card.
Yeah, I'll be taking Andrew Nichols' work card, which would be very nice. Get a nice limit on there. But it's important to say as well, like, this also provides some opportunities for New Zealand exporters to then try and find new markets. So if everybody then says, do you know what? Bugger the US, we're going to create our own free trade agreements, and New Zealand is going to trade even more with the Middle East and India, and we're going to try and do more business with China or the EU. That could open up more markets. Now, if we think about how many of our exports go to the US, it's about 10% of our stuff. So it's wine, it's kiwi fruit, it's meat, it's milk powder, all of those kinds of things.
So it's not massive. Well, 10% is a big number, but it's not massive, right?
Well, if you think, okay, we've got a tariff. I haven't seen any forecasts about how much that might come down. But let's say that our exports to the US dropped by 20%. So that means that, you know, we've got to find an extra 2 percentage points because, you know, our exports to the US might go from 10% of our exports down to 8%. You know, we've got to find a new market for that extra 2% of goods. And when you put it in that context, you say, well, maybe that's doable if we're able to go to these other places. Now, if China started putting tariffs on us, if Australia started putting tariffs on us, I think that would be really, really concerning.
But it sounds at the moment like it's kind of the US versus the rest of the world. So it makes me wonder whether or not the rest of the world are going to kind of bandy together to kind of make it a bit more, put a bit more of a squeeze on them.
Yeah, but we've also got to, like, in the show, I always trying to look at, well, what are the opportunities? Because I always think, you can't call up. I mean, you probably would think that you could be able to convince yourself you could, but you can't call up Trump in the White House and be like, change your mind, stop doing this. So rather than
put a challenge to me.
So you've always got to think, well, what's the opportunity here? How am I going to respond? But we also don't want to be so Pollyanna-ish or think everything's going to come up roses and everything's all good. So talk to us about the downsides as well, other than just that my KiwiSaver's dropped significantly.
Well, I think one of the big ones is imagine if this becomes the norm and we start to see this with other countries now. Other countries say, hey, that's actually a great idea. Or maybe to justify our tariff that we've got to pay, or our tariffs with the US, we're going to start to charge little old New Zealand as well. That could have a serious impact. And I guess, you know, it is going to take a wee while for the market to kind of adjust with all of this news. Like, it's been pretty extreme watching the stock market over the last few days, seeing the impact that it's had in such a short period of time. I don't think it's going to be an overnight fix where things get a bit more normal.
I think the big thing as well is going to be uncertainty. So because the world feels even more uncertain, now you're seeing a huge 10% decline over 2 days in a number of different share markets. And so people feel quite nervous. They don't want to make a decision. Well, if people or businesses say, well, I'm not going to invest as much in my business because I don't know what the future looks like, I'm not going to spend that cash to make my business bigger. Well, that can cause a contraction in the economy as well because businesses aren't spending as much. If consumer sentiment takes a bit of a hit, if consumers aren't as confident, maybe you're like, well, I don't want to go out and make a big purchase by, upgrade my washing machine and spend $5,000 building a deck or something. I don't want to go out and spend if I'm not sure if the economy is going to do well or not. If I think that the economy is going to do poorly and my job might be at risk, actually, I need to conserve cash rather than go out and spend. And that could impact the economy as well and mean that the US potentially goes into a recession or the New Zealand economy doesn't do as well. So there certainly are downsides. A lot of it comes into the sentiment of it, especially if you have a bit of a wealth effect. If everybody's KiwiSaver's down and then we say, oh, I don't feel as rich, I don't want to go out and spend. So that is the downside. But I think we also have to say, who knows at the moment because the world is so uncertain. But there are probably going to be some opportunities. There will also be some downsides. So that is how Trump's tariffs could lead to lower interest rates here in New Zealand. Some of the arguments for why the tariffs are terrible and also why they could have opportunities for us here, and also how I lost over $5,000 in the last 30 days. Right, let's wrap it up there. But please don't forget to rate, review, and subscribe to the podcast. It really does help us get the message out to more people. Thanks for listening to the Property Academy podcast. I'm your host, Steve McKnight.
And I'm Andrew Nicol.
We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time.